Hello once again, and welcome to this edition of the Cattle Call. Cattle Call, of course, is brought to you by Wolf Auto, small town strong. I am on location at NCC The Classic, and you might actually hear the judge talking here shortly behind me. So we got some Simmental bulls in the ring right now. A big cattle show, lots of cattle producers, which, Brad, you know what that means? We got questions from cattle producers. So Brad Kooima joins us. He is with Kooima Kooima Varilek out of Sioux Center, Iowa. And I wanted to first give a shout out and thank you to the comments and the different things from last week's episode where we talked a little bit about this elevator, but there's a chance that maybe it's stopped a little bit. We're going to find out more about that as we talk about the prices in this cattle market, and we'll look at some other things that are coming from those cattle producers and ranchers that are right here at the show. So Brad, let's kind of start out, talk about is a cash low put in place at this point? We're going to put you in the hot seat.
Well, I don't mind that. You know, I'm one of those guys that's dumb enough to actually maybe give an opinion. Thanks for having me on, Susan. And that's cool that you're getting some interaction with some of our listeners, your listeners, I should say. But so, you know, obviously the feature of the market here the last 3 weeks has been, you know, once we had the 212 in the cash, following week it was closer to 208, then 206. Last week we sold cattle around here for 203, and so what happens then, unfortunately, is, you know, at leverage. We've talked about what leverage is and how fine a line there is between too many and not enough. You've heard me say that. So I've been wondering here, and I was kind of thinking last night when I was thinking about doing your program today, that, you know what, maybe it's time for me to be a little bit, get out there and guess, which is what I'm doing, guessing. I don't know if I did. Wow, that'd really be fun, wouldn't it? But I think this week is going to be the low week on the cash. Now, I do think there's unfortunately a pretty decent chance that cash is going to be lower than last week's 203. There's been a handful of cattle traded in Iowa at 200. I don't know if that'll be where the whole trade is. Maybe not, but I wouldn't be totally shocked either. And if you remember how excited you were when the first time you heard the $2 bids, you know, I guess I've been reminding some of these people that, you know, it's still a pretty big price. And I think that's still going to excite, you know, or interest some people into doing it. I would say that the Fed Cattle Exchange, which most of the time we don't pay much attention, if at all, to, that's a video auction in Texas where they are trying to improve the price discovery by, you know, selling 312 cattle maybe once every month or so on that there. But they did have a 202.5 bid on that auction. I don't know the particulars of the cattle or who bid it, but it was passed. So I don't know, maybe that's a little something. So if we catch on the cash this week, or more than likely, unfortunately, what might happen, Susan, in my opinion, is we finish the week Friday, we get this cash trade a little lower. Next week, we have a packer that comes out with blood in their eye and say, okay, we're going to buy him for 198. Then I think the feedlot operator and the owner of the cattle bows his neck a little bit and says, hey, you know what? We don't have any more cattle than we had a month ago, and the market was 210. Packer margins have certainly improved immensely now that they're buying the cattle back lower. And then the next step, of course, which is what I'm hoping, is that all of a sudden now you see the packers looking at each other going, well, maybe we better kill Friday after all, because we're making a little bit of money again. So that's kind of the progression of how I see things happening, hopefully over the next 2 weeks.
All right. So the first question coming from a rancher here has said, will we see cash market and the board get closer? And if so, when?
How about when the CME figures out a way to fix this contract? Sorry. That probably isn't going to play well in so many places, but I'm not ashamed to say that because I've said it at meetings that I've had with CME representatives. You know, this lack of this total disconnect between futures and cash. I mean, look at it this way. Let's say you were a natural long, which is a fancy way of saying you're a packer, okay? Somebody that buys cattle. You know, would you pay 203 or would you maybe go long futures at 197 today on the Feb cattle, knowing that the contract expires in 10 days? You know, it seems to me that the lack of faith in this contract, we got to do something. You know, a couple of things I would do is I would add a demand feature. That'd be awesome. In other words, where the guy that's long says, hey, bring him. That would change the basis in 5 minutes. Okay. Make this thing a little less, get rid of the reclaim feature. That's another thing I would do. Decrease the margin so it's a little more of an attractive market. You got to do something to slow volatility. So slow the volatility. They can do that. They did that in 2016. velocity, there's a way to do it. Okay. So it's the volatility, I think, that scares away the long speculators. So that's a great question. I wish I had a better, that's my answer, even though I wish I could. Trust me, there are some of us that do try to work on this stuff, but it seems like the interest right now is to increase volume, and the volume comes from funds and algos and HFTs and things like that. So when the basis will come together, the last couple of months, it's literally, it's taken until the last couple of days when you finally get convergence. And even then, it's iffy. Cash settlement's not the answer, by the way. If somebody thinks that that's the answer, look at the hog contract. That doesn't have convergence except for about 3 seconds every other month. So I wish I had a better answer, but that's my best shot at it.
Another comment, and you and I were talking about this even before we started the program today, is another screwroom case was found at the Mexican border. Many thought, when this came out on Tuesday, they're going to close the border again, but lo and behold, the workings of the USDA and the government there in Mexico kept the border open.
I think that was a lot of the stimulus behind the rally yesterday, Susan, particularly in the feeders. When that news was out that they found another cow in Mexico with it, thinking, well, maybe they'll shut the border, and we saw the feeder cattle coming out. I might also add that the feeder cattle might have had a story on their own. I mean, we are a big discount to the feeder cattle index. Now, I know it's February, and there's, we are ways till the March expires. But this cash cattle feeder, the cash feeder trade, the real trade, the sale barn, resilient would be a great word. I mean, they continue to plow ahead here. It doesn't seem to be much weakness in the cash feeder trade. And so one could maybe argue that we had fallen a long ways behind anyway. But yeah, the USDA says, no, we've got protocol, Ivermectin, et cetera. We're confident that if anything has it, when it gets to the border, we won't let it cross. At least that's what they're saying. And so, I actually thought this morning maybe we might have a little more pressure in the feeder cattle when that news was kind of back in there. We were lower, but certainly didn't take off what we had put on yesterday.
All right. Another cattleman question for you is, what will be the value of running age pairs, and what will it be in the spring? Do you have any thoughts?
Ooh.
That's a heavy one.
A cow-calf pair. Right?
A cow-calf pair, yeah. A running age pairs. What do you think they might be in the spring as the folks look at this marketing plan for the rest of the year? Did we just stump Brad Kooima?
Yeah, easily done, by the way. I should have asked you to give me the, we could have done Jeopardy. Give me the answer, and then I'll guess what the question was.
Yeah. That's a hard one, I'm sure, to try to pick out anyways.
Well, it is, and it's there's some dynamics there. Of course, you're going to have grass and all the rest. You're going to have enough feed and all of that. But I guess I'm going to back into it from a fed cattle standpoint, and from what I see in terms of what's happening or not happening with expansion, and what's happened here with the age of the cow herd. It would seem to me. I'm not going to put a price on it because, that price is variable from region to region to begin with too. But if I had to guess it, I would say, and I don't want to screw you up here, guys, and I don't want to get you too bullish, but higher than now. Can I answer the question, say by coming that? Because I think it's higher than now. Okay. And the reason I feel that way is because I don't think we've had the highs yet on cash live cattle. I don't think that we've made the highs on futures either. And when I look at feeder cattle available outside of feed yards, if it's not a record, it's close. Okay. I mean, we pulled this whole calf crop ahead again too. So when you've got a limited number of those cattle to pick from, the ones that are fortunate enough to have them, they're the beneficiary of that deal. So, I'm optimistic in this cattle cycle for another 1.5 to 2 years. Now, of course, the unexpected, right? The black swan, I got to give you the disclaimer, something like that happens,
right.
I'm wrong. But if it's just cattle fundamentals, guys, we're in a good position here. And this first part of this whole rally has been on demand. We've talked about this, right? Not supply. Actual steer and heifer slaughter for the whole year of 2024 was down a minuscule 0.5%. So wait till the numbers get tight, and we'll really find out where the bear goes to the bathroom, right?
All right. I promise last question before we look at the cattle on free pre-numbers for you. And it's with all the recent Fed cuts that have happened, we saw it at U.S. Mark coming at the end of last week, which caused concern for cattle producers. Do you think as a cattle producer, one should be worried about the reports that we get on a basis right now, box beef, cattle on feed, for example, other reports coming out, if there is going to be further job eliminations through the USDA and NAS?
Unfortunately, I would say that the hard answer to that is that yes. Look what happened to our cattle inventory report in July when we had a whole different regime in place. I mean, for $50,000, they told me it was an allocation of only $50,000 to the July inventory report, which to me I thought was maybe the most critical report we were going to be able to see for a year or so. I've actually had some visit with some USDA people. I told them I'd rather have the inventory report as the monthly on feed reports. I mean, once you know what the calf crop is, it's kind of a matter of timing when they go on feed. It's a good question. I hadn't thought of it as much in the term of cattle news as I did on some of the grain news. Okay. I've crawled up that ladder a couple of times and running way too long. I apologize, but I can tell you there's so much duplication in the grain numbers that I think you could eliminate a lot of this and you'd have more accurate numbers. Go to your FSA office. We all got to go there and tell them how many acres we planted by June 20 or whatever the day is. Use that number. Why are we guessing until October? So there's certainly ways to save some money. That's a deal where I think we've got to talk to our congressmen and people like that, make sure that these people on the ag committees know that it's about transparency. We get to know as much information as the people that are buying our stuff from us do, I think.
All right. And last but not least, cattle on feed report. You and I are talking before the numbers come out on Friday. What's some of your preliminary thoughts on those numbers?
Grab my notes. Apologize.
You're good.
Caught my best side there, right? The backside. I'm just going to, we've been so caught up in the placement number the last several reports, so I'm just going to hone in on that if you don't mind. I think the placement number is going to be up a ways. Okay. Average trade guesses look like around 104. It could be all of that. However, if you live in Nebraska or Iowa, or probably anybody in this that's listening to this deal, do you remember last year's January? Placements last year were a record low. So we could come in at 104 and 105 and still be about the second lowest placement number for January in the last 6 or 7 years, something like that, 7 or 8 years. I don't have it right in front of me. But so we're going to have a little bit uptick in the placements, but it's still a very, very, very low number because it's always a comparative to last year, of course. On feed's going to be a little less than 100, I think. Slaughter slowed down a little bit lately, but I think the marketing number is going to be just fine. So my guess is the cattle and feed thing might temporarily think, oh, that's a big placement number. But when people think about it, they'll go, no, it's really not.
All right. Well, Brad, I know we went a little bit longer, but we had some great questions coming from cattle producers that are here at the cattle show at NCC The Classic. What's the best way for folks to get a hold of you to have some more discussions?
kkvtrading.com, and we're getting a few hits on that lately. So you can look us up, find us all about us there, or we have a phone still, 712-722-0023.
All right, that's been another edition of the Cattle Call. Cattle Call, of course, is being brought to you by Wolf Auto, small town strong. And a quick reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Cattle Call right here on the Rural Radio Network.